But let's talk banks and try and understand whether or not this PSU banking trade is here to stay. Vaibhav Agarwal, VP Banking and Angel Broking, joins in on the show right now. Vaibhav, hi, good afternoon. Now, PSU banks have cheered the move of the government announcing the Indradhanush plan, but some analysts are saying that it's a repackaging of older plans. Do you see them as incremental steps?
We would tilt towards the side that, are there really substantial changes or, are these incremental? In our view, most of these measures are a little bit incremental, and one really has to wait and watch, and only time will tell whether, there would be a structural change in the way PSU banks are governed, because ultimately, all said and done, the government would remain the, main shareholder. So it's only time would tell. Clearly, PSU banks have been floundering, so it was quite clear to everyone that there was need for something different, some new approach, and that is what the government is trying over here. But it's probably too soon to sort of conclude that all their problems would be solved right away.
So, Vaibhav, how are you assessing some of the key banks in terms of the Q1 asset quality improvement, and also coming quarters? What are you expecting after listening to the management commentaries?
So exactly, ultimately the bigger near-term problems remain NPAs and the fact that PSU banks are not really making, profits, commensurate to their capital. Return on equity remains very low, below 10% for almost all PSU banks, whether they be large or small. And as far as NPAs are concerned, all said and done, the borrowing sectors such as metals remain under stress. In fact, the stress has increased in the last 3 months or so. And to that extent, PSU banks are likely to continue to see some stress from these sectors, in the next quarter or two as well. So, those problems are still there. And it's only to an extent for the larger PSU banks that the capital adequacy problem to an extent has been addressed. So they do have, decent amount of capital adequacy now, the top ones like SBI, BOB, PNB. And if there are growth opportunities in the economy, at least they have some degree of capital to pursue those growth opportunities. But, the bigger problem is right now the sectors to which they can lend, those are itself under stress.
Right. So what's the sense that you're getting about recommending your clients in PSU banks? What is it that you're doing right now? How are you approaching this space?
SBI was the one PSU bank where we did have a buy rating. We had a target price of 309, which we are retaining. For Bank of Baroda, we feel that again the valuations have run ahead of the fundamentals. It's now trading above one-time price to book, while our expectations on return on equity would be below 10% even for this year. And their exposure to metals is again 9 to 10%. So we would remain neutral on that stock. In the next rung of PNB is one stock which is on our radar, and if there are some signs of improvement in asset quality in the next quarter as well, that could be a stock which is looking interesting, because now it's at a discount to the other larger PSU banks. Although we have not yet outright upgraded that stock, but that is on our radar. The smaller PSU banks, we remain neutral because their broader fundamentals remain quite shaky, and even their capital adequacy and almost on all parameters they continue to lag behind the larger PSU banks.
Vaibhav, good speaking with you. Thank you for taking the time out and really analyzing and dissecting the PSU banking lot for us. Guess what? It's already nudging the green line right now. 84.81 is back in the ticker for the Nifty. Sensex also in the green. 1.25% higher for the small cap index as well. With that, we'll wrap it up in this edition of Riding the Bull. Up next, closing trades.